Hello, today is Friday. It is 1:05 p.m. It's right in the middle of the trading day. I'm going to adjust a few things so I can keep an eye on the market at the same time. So 1 second, please. Okay, so this is a little bit rare for us where we actually do a video intraday, but I think that this will help a lot of the clients that might be a little bit on edge on what they're seeing in the news. What does this mean for growth with the 10-year Treasury, with yields increasing? We're going to go over that right now and kind of give you our thoughts, the moves we've made, which direct into the point. Again, none of this is financial advice, but this is mainly for clients. Clients, this was not a good week for us. You're going to look at your statements and realize it was down from last month, which is frustrating. I get it. But I want you to understand that the moves I'm making right now might be short-term pain leading to very, very good things. Okay, so yields go higher, and it's at a very, very rapid pace. That usually hits growth hard. So this is this is the week right now. You're like, that's not really too bad of a week, but what do you notice? Growth or the QQQ or NASDAQ got hit hard. Okay, so I added last Friday, and so we got hit a little bit. Now, we're at key levels as we speak. I'll show you those key levels. But what I'm not going to do is make the same mistake as I did last year, is sell at key levels. Okay? The reason I'm not going to do that is a lot of times if I trade that, I have to wait 1 to 2 business days to make the transaction for the next trade to take place. So that causes a problem with how fast this market is moving. So if I think we're near a bottom, I need to hold. Okay? So that's really important for you to understand that, hey, if I wanted to sell, which, once it broke 38.30 on the S&P 500, I said I would sell. Well, 2 days later, we hit the low that I think will probably be the low. If it goes below that, then I'm out. But I think we're very, very close to a bottom here, which is why I'm like, hey, not doing anything. Listen, I have 20% to add. Okay, so we're not in a bad position, but is it ugly this week, this month? February is usually the worst performance-wise throughout history. So it doesn't surprise me, but it came on hard this week. So not fun. Understand that the moves I'm making is moves that I need to make so I can not make the same mistakes as I did last year. Like, we did okay last year, but where I made the mistakes last year was basically selling, and then the rally occurred within the 1 to 2 day period, and then you're 1 to 2% or even 3% behind. Okay, so I need to hold longer during these periods if I think it's going to turn around quick, and I do think that's going to occur. So you can see, like, it's a tough thing. So the first thing I want to show you is what you're seeing in the news is the 10-year Treasury yield. This is as of Thursday's close. Right now it's at 1.47. Okay, the reason why everybody's going bonkers is the move is basically back to pre-pandemic times. Okay, so they're basically saying, are we there yet economically for this to go this high? Now let me first add this. Okay, do I think the market can perform well when rates are above 1.54%? I do, and clearly throughout history, when rates were above here, the market did very, very well. Okay, but right now the move is so extreme. Like, look, when an RSI gets this high, which has only occurred, again, this is each year. This does not happen very often. In short, we want people to be buying bonds. I don't want to buy bonds because, no offense, I don't want to be in a 10-year bond at 1.54% a year. I have no interest in that. And I don't blame it if nobody else does have interest in that. But that's the problem, is people are saying this move is pretty extreme. I mean, it's happened very few times. And so this takes some time to work through. And so what has happened is growth has been directly tied to this. As yields go up, it is concerning for growth. Okay, so that is what is happening. For a few days there, growth was directly following the yield. Exactly. Today it's a little bit off. This is Friday, so it's finally getting a little bit off that and easing just because we sold off hard and a lot of really good names. Like an Etsy reported today, did very well. But like a Nvidia, great report and was down 7% yesterday for no other reason than the market selling off. I'm going to repeat this again. When the market sells off, it does not matter what you're in. It is going to sell off. I don't care if you're thinking gold, silver, bonds. It is going to sell off. Okay? So we do believe cash is a position. So that is why we have 20% in cash. And when we get over a key level, and I'm going to show that to you right now. S&P 500 key levels. There we go. So what I'm watching is if we can get above the 3860. Now we've been chopping at that level all day. You can see a little clearer here. We're at 3841. We got to that 3860, failed again. I am not adding 20% until I get above 3860. I have plenty of growth, plenty of value on until this as well. Now it's a very good day for us today, but statements are going to be ugly. Okay, so I have to add when key levels are touched. For example, usually good things happen if we can hold the 50-day moving average. That is what we tested, as you can see here. We tested it right here and are bouncing higher. This might not happen in a week where we just recover. Despite what has happened in previous weeks, we have a yield issue now. These take some time to work out. So again, the key level that we need to get above for me to add more is 3860. But the names that I'm in will be the first names bought on once we finally base. But that's going to take some time for yields to recoup. Okay? So that's kind of where we stand there. A few things why I think we're close to a bottom is number one, this gap right here. I've been saying this for a long time. It's a matter of time until we test this gap. It finally tested. So overnight, what a gap means is overnight it moved and there was a gap there, meaning a big gap up. It doesn't show. A lot of times these get tested. We tested the first gap. Now we're testing a second and we bounced higher. Okay, so that is one good sign. Another good sign where I think we're very close to the bottom. Let's actually look at the TLT, which is the bonds themselves. So it's basically the opposite of yields. So when yields go up, it should induce buyers to come into bonds because the yields are increasing. So what you're seeing here is an RSI of now 31, but this was at 17 yesterday. Oh my gosh. So rarely in history does that happen. So that's why it's wise not to sell growth at that period because it's an extreme. Okay. As you can see, a lot of good things happened for growth when bonds are this low or oversold. Okay. So I wanted to show you from the yield perspective. I wanted to show you from the bond perspective. The put call ratio, even though this is going to show as of yesterday, this actually touched 90. That's great. So the fear hit. The complacency is a little bit out. I wish it would go even higher, but we're seeing some good things. So I do think we're close, but I need to save 20% to add in case we don't. Okay. So it's what I believe is short-term pain. It's not fun. But these are the times where I need to make sure that I am taking the appropriate risk. Even if you're conservative, these are good times, good risk-reward trades. It may take time though. Okay, so any more additions, gonna wait to 3860 as I said. Okay, so next, another thing that I think is very good that where I think we're close to a base is, again, we talked about this last week actually. Hey, we're close to that 20 mark here in the VIX, which is if we get below 20, good things happen in the market. It touched and exploded higher. So there's still some fear in the market. We were truthfully pretty hot in the market, meaning a little complacent, quite complacent. Now I'm hoping this goes down. So the VIX got up to 31.6, which above 30 is not good. Okay, so now we're going down a little bit. The fear is easing. That is a good sign. Okay, it doesn't mean it's over. It can take some time. This is looking very much like January, the end of January. Okay, so I don't know if it's the end of January or September 2020. That's kind of where we're looking right now. Okay, so February is usually brutal. We experienced that last year, right? This is very true seasonality wise with a new president. A lot of things shake out, a lot of unknowns. I don't think growth is out of the picture, but I do believe more value should be added to portfolios, and that's why I have 20% to add. Okay, so there's my take there. Let's take a look at NAM. Another good thing is some of the complacency is winding out. So last week we were above 100% of active asset managers portfolios above 100% invested. Now we're getting more to like January levels. Okay, so we're seeing some good things. Some of the complacency go out. And the McClellan Index, which we always pay attention to, it did cross. It's looking a lot like January right now. No assumptions. Again, the key with anything is no assumptions. I want this to go higher. However, the S&P 500 needs to get above 3860 for me to add new positions. If it cannot hold this gap, right here, if it can't hold that, we've got problems. And I'm out. Okay? But look how many times, a lot of times when it gets in this range, good things happen. Okay? So, and a lot of things turn around right here when the RSI is, can it go lower? Yes, it absolutely can. And that's what we need to be cautious. And that's why I have 20% to add in case it does go lower. Right now, there's a lot of uneasy investors with the yield situation. Whether you like it or not, again, the market has proven the market can do exceptionally well when yields are above 1.57%. But right now, the market cares about that, and so does price action. So I'm going to follow that accordingly. So things that we're in are doing very well today, but they got smacked. Again, and NVIDIA was down 7% after a fantastic report. The point being, it doesn't matter what you're in when the market is selling off. So I have to be careful on making sure, hey, key levels, are they holding or not? And right now they are. It's been brutal. It's brutal honesty, but I need to make sure I'm not making the same mistakes as last year. It was literally the difference of a 20% difference. Now, we did well last year, but we could have done a lot better. And these are the moves that I need to make, is to hold during these periods a little bit longer. I know it's painful, but the same thing happened last month where we sold off into the end of the month. It looks horrible in your statements. That's why I hate statements. It shows nothing for your portfolio. It's a snapshot in time. And so I was getting calls 5 days later when the market was 5% higher. And it means absolutely nothing. Sure, it's good and interesting, but I am also concerned many of you are watching your app every day, which is fine if you can handle it. You're going to see a 4% swing at bottoms. That happened today. Okay? We were down 1%. At one point, we're up 3%. It's gone back and forth. You have to understand that that is normal at a base. Okay? It's going to be a shakeout. But I cannot sell here yet. Okay? At key levels, I will sell. I wish I could have sold at 38.80. A lot of this happened overnight. But at this point, I'm not seeing a reason to sell more. It's more of, will I be adding shortly if 38 60 holds in the S&P 500. So want to keep you posted. I want to be real with you to say, listen, I know your statements are going to look awful. It's not fun. I hate it. But I'm not making the same mistakes that I did last year. Okay? So many of you probably didn't even know I made those mistakes. I was very real at the end of the year and saying like, hey, we did okay, but I should have done better. And these are the moves that I need to make to do better. Okay? So hang in there. I appreciate you guys. Hang tight. It's going to look ugly, especially if you looked mid-month. I mean, we're about 8% lower mid-month, but if you look at since the end of last month, we're a little bit below that, okay? So the indexes are doing okay, but I need to be in individual names where I think we'll have alpha above the market, especially on these dips. So short term, it's going to be ugly, but long term, this is how I make and beat the indexes, okay? So hang in there. Appreciate you guys. Have a good weekend. Bye.